Hey everybody, welcome back to my channel. I'm Cody, the Clever Investor, and if you're new here, we talk about all things related to real estate finance and entrepreneurship. Today, we're going to be diving into a topic that I think is essential for everybody looking to get ahead financially. That's improving your credit score. So grab a notepad because you're not going to want to miss these tips. So why is your credit score important? Well, it's like your financial GPA. It determines whether you're going to qualify for a loan, the interest rate you're going to pay, and even your eligibility for certain jobs or housing. Essentially, the higher the credit score, it's going to open up doors and opportunities that can save you thousands of dollars over time. The first step to improving your credit score is knowing what's on your actual credit report. Now, you can request a free annual report from the three major credit bureaus: Equifax, Experian, and TransUnion. Websites like annualcreditreport.com, they're great for this. Now, once you have your report, review it for any errors. Anything from incorrect late payments to fraudulent accounts can negatively impact your score. If you find any of these mistakes, make sure you dispute them right away. Listen, this is common sense, but I'm just gonna say it. Paying your bills on time is the single most significant factor that contributes to your credit score. Even one late payment can hurt your score. To ensure that you never miss a payment, I highly recommend that you set up automatic payments, or at the very least, a reminder, or tie a fucking string around your finger. Just don't forget to make the payments. This isn't about credit card bills, utilities, rent, even medical bills. Any missed payment can affect your credit score, so just don't do it. Listen, credit utilization refers to the ratio of your credit card balance to your current credit limit. It's advised that you keep the ratio to around 30%. So if you have a credit limit of $10,000, try to maintain a balance of under $3,000. Now you can do this one of two ways. You can pay down your balances, or you can call your credit card company and request a credit increase or a credit limit increase to improve your credit utilization. Dude, this is kind of cool. The variety of credit accounts that you have, like credit cards, mortgage, auto loans, etc., it can also influence your credit score. Lenders like to see that you can manage like different types of credit responsibly. However, don't go just out there opening up a bunch of new accounts all at one time, because that can negatively impact your score. The length of your credit history actually accounts for about 15% of your credit score. So older accounts are actually a good thing. Make sure that they're paid off or they're just sitting there and they're in good standing, but the older accounts, don't close those down. Make sure that you have them, keep them open, and keep them in good standing. Every time you apply for a new credit line, a hard inquiry is made on your credit report. So the more hard inquiries you have, the lower your credit score is going to be. While one or two inquiries isn't that big of a deal, several of them in a very short amount of time, especially when you're doing different things. Like if you just do mortgage, like you're trying to get a new mortgage and like you're shopping like mortgage rates with different lenders, you can get a bunch of different mortgage quotes and they can ping your credit card. It's not gonna really mess with you too much. But if you're doing mortgages at one time, you're doing an auto loan at one time, you're opening a new credit card, by pinging your credit all at one time like that, it's gonna lower your score. So apply for new credit sparingly and only when you really need it. Now, if you're feeling overwhelmed, consider hiring a credit repair service. These agencies, they can negotiate with your credit card companies or your creditors on your behalf and help you actually navigate the complexities of improving your actual credit score. However, make sure that you do your due diligence and find yourself a reputable company, because there's a lot of crappy ones out there. Now, I want to share some hacks or tricks with you that will quickly boost your credit score. Although it's essential to note that maintaining good credit score is a long-term endeavor, there are some rapid action strategies that you can deploy. First off, become an authorized user. If a family member or close friend with a long credit history and they're responsible and they pay their credit cards and they use them and they have high limits, have one of these people that's really good with their credit add you on as an authorized user to their account. Okay, by adding to their account, it's gonna positively affect your credit score. However, make sure that the primary account holder is keeping the balance low and paying off their accounts on time. Otherwise, it could actually negatively affect your credit score. Rapid rescoring. Check this out. There's actually a service that's offered through mortgage lenders that involves correcting errors on your credit report, and they can get it done within days rather than weeks or months. It can be beneficial if you're applying for a mortgage or you need something done quickly where you need that quick boost in your credit score. Another good tip is to request a credit limit increase. Like I told you earlier, a higher credit limit can lower your credit utilization ratio, which we want to keep under 30%. So go and call your credit card company and see if you can get a credit increase. And by requesting this increase, you could do it online or by phone, it's going to put you back into a normal credit utilization ratio, which will then boost your score. But just know that this could result in a hard inquiry, which might lower your score temporarily. So you want to do this all at one time when you're not really needing to use your credit, so that way you can kind of get the boost and also the negative impact all kind of done and out of the way at one time. Another great strategy is to pay down balances strategically, especially with high utilized accounts. Now, if you have multiple credit cards, target the one that has the highest credit utilization ratio and focus on that one first. Reducing that balance on that particular account can have more of an immediate impact on your overall credit score. Open up a secured credit card. Listen, if your credit is really low and you can't qualify for a regular credit card, a secured card can actually help you build up your credit. So just make sure that the card issuer reports that all of your activity, all your payments and everything to the 3 major credit bureaus, so that way this strategy actually helps you out. Multiple small payments in a billing cycle. Now, if you're financially able to do so, making multiple payments throughout the month, known as micropayments, can actually help keep your credit card balances low and improve your overall credit score. 2 more quick tips. This one is all about setting up balance alerts. By setting up balance alerts on your credit cards, it's going to help you manage that credit utilization rate more actively and accurately, thereby improving your overall credit score. And the last tip is don't close those old accounts. Like I said earlier, keep those unused credit cards open, right? Unless a card has an annual fee or some other cost associated with not wanting to keep it open, keep it open. Don't close it. Closing the account can negatively impact your credit score because those old credit lines, the age of them, plus the credit utilization ratio on those lines are both very important factors to your overall credit score. So keep those old accounts healthy, paid off, and open. Remember, guys, while these hacks can provide a quick boost, consistent long-term financially intelligent behavior like paying your fucking bills on time and reducing debt are probably the most effective ways to improve your credit score. Also, each credit report is unique, so the impact that these hacks have on the different credit bureaus and the reportings can vary between each of the different bureaus. Now, before we wrap this up, let's just bust out 2 of the biggest common myths that I hear all the time. First off is checking your own credit score will lower your score. This is totally false. That's what's called a soft inquiry, and it doesn't affect your score. And secondly, that you need to carry a balance to build credit. Again, this is false. You can pay off your cards each and every month and still have fantastic credit and build great credit. All right, that's a wrap. I know this was one of those topics that's kind of random and weird coming from a real estate guy, but we use credit all the time. I can't tell you how many times I go to a bank and leverage my credit cards or get a line of credit or get business credit. We're doing this all the time. So, improve your score, keep it healthy. This is a marathon, not a sprint. With consistent effort, you're going to be able to get your score to climb and climb and climb. And before you know it, banks are going to be throwing money at you. And that's really what you want. All right. Got some value from this, hit that like button, share it with some friends, subscribe for more content like this. Also drop a comment down below if you have any other questions or any other topics you'd like to see me cover in the future. Until next time, it's Cody Spurb, the Clever Investor. I'm signing off for now. Take care. Comb your hair. Peace out.